All of the monetary policies that we have pursued since the 2008 financial crisis, it can all be summed up in one word: inflation. Inflation was deliberately created.
Is it different now as we approach a double-digit inflation target than it was, say, back in the 80s? And then how do you explain it to someone who's never experienced anything like double-digit inflation?
Well, first of all, I don't think we're approaching double-digit inflation. I think we're already there. Prices going up are just a result of inflation. But the government really wanted to change the definition of inflation from an expansion of the money supply to an increase in prices so they can confuse the public as to the source of inflation. Because if the public realizes that inflation is expanding money supply, well, they know exactly who's controlling the money supply.
If I could put you in to the Oval Office for the next 4 years and say, guess what, let's bite the bullet. Let's clear all this out and clean all this out. What would the economy look like for 4 years in the US and globally? And then what would the consequences be for the American public to get this right?
I would like to liberate the people from having to pay the income tax. I don't want any personal income tax. I don't want any corporate income tax. I mean, I don't want people to have to waste money and time calculating the income tax and keeping track of it. I don't want people rearranging their affairs, or spending time trying to avoid taxes. I want them spending their time and their resources trying to generate income, not try to shield it from taxation.
The world is changing. Inspiration is everywhere. It has never been so easy to connect, share, and bring people together. We're learning from others and finding the best in ourselves. Challenging our beliefs. Sharing our vulnerability. Overcoming our fears. Transforming ourselves so we can transform the world. How far can we go? This is London Real. I am Brian Rose. My guest today is... This is London Real. I am Brian Rose. My guest today is Peter Schiff, the economist, author, financial commentator, and podcast host. Your career began as a stockbroker in the early 90s, and you held positions at a number of major financial institutions before co-founding Euro-Pacific Capital. As the founder of Schiff Gold, you've been a staunch advocate of investors allocating 10 to 20% of their portfolios to physical precious metals as the safest hedge amid a collapsing world economy. You were one of the first expert forecasters to correctly predict the 2007 housing market collapse and subsequent 2008 financial crisis, making you one of the most sought-after commentators in the game. Your analysis and predictions are regularly featured on CNBC, CNN, Fox News, and publications from the Wall Street Journal to the Financial Times. You believe that we are now facing a worse financial collapse than 2008 and an inflation crisis that could last for another decade. Peter, welcome back to London Real.
Thanks, Brian, for having me back on. And by the way, I haven't been on CNBC for years, so you might want to scratch that network off your list. I used to be on quite often. Other networks, too, that stopped having me on were Bloomberg. I used to be on a lot. CNN doesn't have me on anymore, MSNBC. Fox News still has me on, Fox Business, so to their credit. And there's a lot of international news stations that have me on quite a bit, but, my hometown or the United States, I'm not welcome on most of the mainstream media.
Why is that, Peter?
I guess I got too many things right. They got tired of being made fun of, because people would put up clips of me saying stuff and everybody else getting it wrong and me getting it right, and I guess it's kind of embarrassing. But I don't really know, because I know I'm a good guest, and a lot of these networks that stopped inviting me on used to tell me how much they liked having me on and how their ratings would always pick up. In fact, when they knew that people were looking at their ratings, they would go out of the way to make sure I was there, because they knew that whenever I was there, I would bump up the numbers. In fact, a lot of people used to come up to me, when I was on CNBC a lot, and they said, the only time I even turn up the volume on CNBC is if I see you there. So I know I'm a good guest. I have a good sense of humor. So, and I have a quick mind when it comes to these, soundbite discussions. So I think it's a lot of politics involved. Maybe the advertisers didn't like me because I, was criticizing some of the products they were pushing. I didn't have, the mainstream view. I think most of the guests that come on these networks share the same opinion. I mean, they may have slight differences on the margin, but you rarely get somebody that's really outside the mainstream.
Yeah. I mean, I've had this discussion quite a lot with, say Max Kaiser back in the day, who said, look, they always bring on the military. They never say anything bad about their pharmaceutical advertisers. Like, there's a lot of compromised media on these channels. And maybe you don't fit into that nice little mold. So maybe that's why they ditched you.
Yeah, I mean, they had me on. I mean, for years, they called me Dr. Doom on CNBC when I was forecasting the collapse of the housing market and the financial crisis in 2008. So at least they let me come on, and then they would make fun of me. I was almost like comic relief because everybody else would laugh when I was coming on making these forecasts. And then after everything came true, they briefly, gave me credit, and then they all of a sudden really, stopped inviting me on.
Well, thank God for independent media. That's for sure. You don't need them.
Right, and now I've got, my own podcast, which I didn't have back then. In fact, I think I have more regular listeners to my podcast than CNBC has viewers. So I think I'm reaching a larger audience on my own. And then I go on podcasts. I've been on the Joe Rogan podcast 4 times, and I actually got to reach out, and I'm going. I've been a while. I got to go on a show again, but you had me on. I got a lot of views on some of your videos, and so I can get the message out there. You no longer have these mainstream media outlets that are the gatekeepers. There are enough independent channels on the internet that are willing to have me on, and now they have a large enough audience that the message gets out there.
Yeah, independent media obviously is something we've been doing for 11 years. We had you on back in, I think, 2013, and the episode blew up. Again, back then it was like 500,000 views. I love listening to you on Rogan. I love it when you school Rogan about, what was that company in China that makes the iPhones, and you're talking about how, look, they're clearly working there, so it's a better option than other things. I just like, because you bring a fresh perspective to Joe. I haven't been on Joe's show since 2012. I probably need to get back there. And again, independent media is where it's at. I mean, we've got more subscribers than most of the major papers here in England, and that's important. So we've come a long way in 10 years, that's for sure. Peter, I want to jump in and ask you about inflation, because this is something I think you can bring a lot of clarity to people that are listening, especially some of the kids. And look, I think we're probably about the same age, and I have faint memories of gasoline lines in the 70s and the concept of double-digit inflation. I remember that song by Grandmaster Flash and the Furious Five, where he says, I got a bum education, double-digit inflation. That was 1982. By the way, Grandmaster Flash was here a few months ago in the studio. But is it different now as we approach a double-digit inflation target than it was, say, back in the 80s? And then how do you explain it to someone who's never experienced anything like double-digit inflation?
Well, first of all, I don't think we're approaching double-digit inflation. I think we're already there. I think that if the government was still reporting inflation the way they reported it in the 1970s, using the same methodology to calculate the CPI, the month-over-month number that we just got, which went from 9.1 to 8.5, I think it would be well north of 15%.
Wow,
so,
15. Wow.
If we kept score, remember, back in the 1970s, they didn't use owner's equivalent rent. They used home prices. They used actual rent. Well, year over year, those things are up 15 to 20%, whereas owner's equivalent rent is up like 5.5%. That's a third of the CPI right there. That is dramatically undercounting the cost of shelter. But we also have things like substitution that we didn't have back then. Back in the 70s, the basket never changed. Now, they just keep changing the basket. They take out stuff that went up and they put in stuff that didn't go up as much. So the whole thing is manipulated. So we have double digit inflation. We're just not being honestly told that we have it. But you go back to those gas lines of the 1970s, that wasn't the result of inflation. Higher gas prices were the result of inflation. The lines and the shortages were the result of price controls and stuff like that, which the government may in fact implement again. But Americans have been living with inflation for over a decade. It's just that the inflation didn't show up in a dramatic way on consumer prices until more recently. Because all of the monetary policies that we have pursued since the 2008 financial crisis, it can all be summed up in one word: inflation. Inflation was deliberately created, not only by the Federal Reserve, but by the ECB, by the Bank of England, which, by the way, today actually reported 10.1% year-over-year inflation, and the Bank of Japan. Quantitative easing is simply another word for inflation. What is quantitative easing? Printing money and buying government bonds. That's inflation. Inflation is an expansion of the money supply. That is literally where the word inflation comes from. You get an old Webster dictionary, and you can even find these on the internet, and you see how inflation was defined. And it's defined as an expansion of the money supply. Prices going up are just a result of inflation. But the government really wanted to change the definition of inflation from an expansion of the money supply to an increase in prices so they can confuse the public as to the source of inflation. Because if the public realizes that inflation is expanding money supply, well, they know exactly who's controlling the money supply. But if they think inflation is rising prices, the government can blame it on the people who are raising prices, greedy businessmen or Putin, right? Or somebody like that.
Right.
They can point fingers at everybody, but accept responsibility for themselves. So the government has created the inflation. And by the way, the Inflation Reduction Act will result in even more inflation being created by the government. The difference is that for years and years and years, the inflation that entered the economy predominantly affected asset prices. So why did stock prices go way up? Inflation. Why did real estate prices go way up? Inflation. Why did bond prices go way up? Inflation. Why did the price of, antique cars or, art, why did everything go up in price? Inflation. Why did cryptocurrencies go up in price? Inflation. The Fed inflated these massive asset bubbles with all the money that it created. But as I was warning, going back to day one, when they first did quantitative easing, when they did QE for the first time, they didn't call it QE1 until they had QE2. But when they did the first QE, I said that there would be a QE2. I said there would be a QE3. I said back then that we would have more QEs than Rocky movies. We've now had 4. QE5 is coming up. That's how many Rocky movies we had. But the reason I knew the government would keep repeating it is because I knew it wouldn't work. All they would do is blow air back into a bubble, and then every time the air started seeping out, they would want to blow more back in, because QE doesn't solve the problem, it exacerbates the problem. But now the problem is that all that monetary inflation has now worked its way through financial assets, and it has ended up where I always knew it would, in goods prices, consumer goods, producer goods, and this is where it's going to stay. And if the Federal Reserve goes back to QE again, which I think it will, because we're already in a recession and they're going to try to stimulate the economy at some point, especially when we really start hemorrhaging jobs again, when they go back to QE, it's not going to look anything like the previous doses. We're going to have an explosion in consumer prices because inflation is already well above their so-called 2% target. And if the Fed throws gasoline on this fire, even with inflation 3 or 4 times its ceiling, the markets are going to react very differently. I think we're going to have a crisis in the dollar. I think the dollar is going to crash. And I think bond prices are going to soar. It's going to be a sovereign debt crisis. And so it's going to look a lot different than what we've experienced in the past decade or so.
So did they always knew this would ultimately trickle down into goods prices? And then was it going to be easier to explain it because it's the businessmen, it's the war, it's the famine? Or was this a little unintended that this was going to happen so quick? Or was this always something that they expected it to pass through? Hey, it's Brian Rose, founder of the DeFi Academy. I've told you my 4-week crypto bootcamp is amazing, but don't take my word for it. This is what my students are saying.
The DeFi Academy was an amazing experience for me. It took me totally out of my comfort zone.
In this course, I was challenged, I was held accountable, and pushed to do things that honestly weren't always easy.
It's been phenomenal, and I can't believe we're already up on our 4 weeks. It has flown by.
Going through this DeFi accelerator by far was one of the best courses I've taken.
You do this course, you really get into the nitty-gritty of the activities that will make you comfortable with decentralized finance.
Thank you so much to Brian and everyone at London Real and the DeFi Academy for even putting together an amazing course like this.
Anybody else that wants to do it, please sign up. It is well worth the money.
Well, I don't know. I mean, I'm sure there are some people somewhere in government or at the Fed that knew this and just lied about it. But I'm sure there's so many incompetent people there that no, they didn't expect it. They are so clueless about economics, about inflation. And so they're just surprised. But the whole purpose of the policy that we've pursued, it's just kicking the can down the road. We've got this huge problem and we don't want to deal with it. Why does no politician want to deal with it? Because it means if they deal with it, they might not get reelected. Because you don't get reelected by being the bearer of bad news, right? There's an old saying, don't shoot the messenger, right? So nobody incumbent, no politician, no central banker wants to level with voters about how bad things are and what they actually need to do in order to correct the problem. What they want to do is kick that can down the road because then they can get past the next election. And so that's all we've been doing. But every time we do that, we make the problems that everybody is afraid to deal with even worse. And now they're even more afraid to deal with them because the consequences of doing it are even worse. So again, the can keeps getting kicked. But at some point, you run out of road, right? Or the can is simply too large and you can't kick it anymore. And, we got to be there. We got a $9 trillion Fed balance sheet. We got almost 31 trillion in national debt. We've flooded the economy with money and we've really kicked it into a higher gear with COVID, when we had the worst combination of monetary and fiscal policy I've ever seen. And I called out the Fed and Congress in March of 2020 for the asinine policy response to COVID. They, on the one hand, they ordered businesses to shut down and workers to stay home. So they ordered a big reduction in supply. At the same time, they flooded the economy with cash to increase demand. In fact, they were dumb enough to send checks to people who were no longer working that were 2 or 3 times as large as the money they earned when they were working. So we had less supply, we had tremendous demand, and of course, prices went straight up, the opposite of what they should have done. The government should have cut spending during COVID. This Federal Reserve should have shrunk the money supply. If we were going to stop production, which was a mistake, I never believed we should have shut down the economy. I think it was an overreaction to the COVID. But if we were going to do that, if we really thought it was necessary to shut everything down and everybody stay home, then we also needed people to stop spending. We couldn't give people money to buy stuff when nobody was making stuff. We had to have a more serious recession than the one we had. But again, the politicians didn't want that. They wanted people to keep spending even though they weren't working. And, the consequences were obvious to me. It's just amazing that so many other people in government, couldn't see it. Or even in the private sector.
I think I've asked you this before, and I'm going to ask you again, Peter. If I could put you in to the Oval Office for the next 4 years and say, guess what? Let's bite the bullet. Let's clear all this out and clean all this out. What would the economy look like for 4 years in the U.S. and globally? How much pain, and then what would the consequences be for the American public to get this right, to set things straight?
Well, it would be a combination of pain and relief.
Okay.
So, it wouldn't just be all pain. And I don't know exactly how long it would take to play out. Remember, we have so many malinvestments. The misallocation of resources is so great. We've made so many mistakes that obviously unraveling this mess isn't going to be easy. Asset prices are going to collapse. Companies are going to default. Investors are going to lose money. There's no way around that. It's just impossible to avoid that. A lot of jobs are going to be lost. Now, a lot of jobs are going to be gained too, but jobs are going to be lost. I mean, we have to lose the wrong jobs to create the right jobs. If people are employed in areas where they shouldn't be, that labor needs to be freed up to be reallocated to where it needs to be. Now, interest rates have to be much higher. Now, what does that mean? A lot of defaults, a lot of bankruptcies. But of course, it's going to encourage savings, which will finance capital investment again. I mean, the economy will repair. The government is going to have to slash government spending. So obviously, if you're dependent on that spending, it's not good for you. If you used to get a big check from the government and now you get a much smaller check, or you get no check at all, that's going to be a big deal. I mean, I think doing the right thing is going to require substantial cuts to Social Security. So a lot of people are not prepared for that, but that has to happen. Now, if we don't do that, then the Social Security benefits are going to be worthless anyway, because inflation is going to destroy them. So I think, a measured approach to cutting in Social Security and maybe means testing it is much better than just wiping out everybody's benefits equally through inflation. So we're going to go through pain one way or another. At least the pain that we would go through with me, calling the shots, would be constructive pain. It would be pain that would eventually lead to gain. But the course we're on now is just going to be pain followed by even greater pain. So we need to do the right thing. And if we could make government much smaller and we could eliminate a lot of the government, I mean, I would like to liberate the people from having to pay the income tax. I don't want any personal income tax. I don't want any corporate income tax. I mean, I don't want people to have to waste money and time calculating the income tax and keeping track of it. I don't want people rearranging their affairs, or spending time trying to avoid taxes. I want them spending their time and their resources trying to generate income, not try to shield it from taxation. We need to go back to taxing consumption. We need a tax system that taxes people when they spend their money, not when they earn their money. That's what the country was founded upon. That was a basic principle that existed until 1913, and I want to go back to that. And that would be a major boom for the U.S. economy. And of course, if I was president, there are so many regulations that I could eliminate with the stroke of the pen that would immediately free up a capital and allow for American business to be much more efficient and much more productive. And money wasn't wasted on complying with all these ridiculous regulations. That money could then be used productively in the real economy. So look, I think capitalism is a very dynamic economic system, and I think it has the ability to deliver substantial gains in standards of living. And it worked in the 18th century, or rather the 19th century, very well. Unfortunately, we didn't have it for most of the 20th century, but if we can go back to it, it could work even better in the 21st century than it worked in the 19th century, and it worked great in the 19th century.
And on average, asset prices would be slashed by a third under President Schiff's plan?
Well, I think the market would take them down a lot more than that. I mean, at least most assets. There might be some assets that would increase in value. And I mean, I think they would, but obviously you've got a lot of companies that have crazy earnings, huge multiples that would crash.
50%.
There's a lot of companies that would go to zero. A lot of companies that have a lot of debt and no earnings, they would go bankrupt.
And real estate goes down, and a lot of assets would go down.
Yeah, but that means real estate is more affordable if you want to buy it. I mean, there's two sides to every coin, right? But also, if I own a piece of real estate that goes down in value, but stocks go down in value too, well, if I want to, sell my house and buy stocks, I mean, maybe it's a push, right? Because everything has gone down in value. But, we're living in a huge bubble, and the bubble has to deflate. And, if you've been getting rich off that bubble, you got a problem as the air comes out, and that's why there's, a big vested interest in continuing this. But, if I had been president 20 years ago, or even 10 years ago, and had I been able to do the right thing then, assuming, I can get the right thing through Congress. I mean, you're not making me king, you're just making me president. So we'll see if I could actually get anything done. But I mean, I would try my best. I mean, I would veto every budget, that was not balanced. I would force these massive cuts. And I would, level with the public. I'd do a lot of talks to try to, educate the public to understand, the mess that we're in and how big the stakes are and why we need to do the right thing. What was I saying? I just lost.
I think you're talking about how you'd get these policies through if you were president.
No. My point was that had I been president 10 years ago and been able to do this, it would have been a lot easier. I mean, it would have been hard. I mean, it would have been hard even back then. There would have been a lot of pain. But because 10 more years of mistakes have been made and the bubble is 10 years bigger, it's going to be worse now. Yeah. And if, if we wait another 5 or 10 years, if we even have that long, it would be, even worse than if we did it now.
Yeah, it gets worse. It's almost like, a bad drug habit. You just need to do more to feel the same, and then more and feel the same.
That's the analogy. And the problem is, if you have to keep doing larger and larger doses of a drug, the risk is you eventually overdose. And that is the point where I think we're at, where the next batch will be the batch that does it, where we overdose and kill the dollar and destroy the economy.
Right. I want to get into the dollar as well. Just inflation for the average American or person out there, or Englishman, who's looking at potentially 15% real inflation, whether it's reported or not, maybe more. How does that start to change, who you are as a consumer and what your daily life is? I read an article in the New York Times about Argentinans' way of life and how it's been over the last 10 or 20 years. And by the way, I am embarrassed that I read that publication, but I read it anyways. And it talked about all these crazy aspects of their lifestyle that we never realized. There was a guy in a hardware store who didn't know the prices of his goods. He had to go look it up on a piece of paper that got printed every couple of days. And it was all these weird choices that turned out this very strange economy that didn't make sense the way we know an economy with low inflation. Is this something that's coming up, and are we going to have to start thinking differently? I'm looking for partners, collaborators, colleagues who want to join forces with me around the globe and create real value, generational wealth, and financial freedom for everyone else around the world. Get involved in the cryptocurrency markets, get involved in the NFT markets. This is your moment. Life all comes down to a few moments. Don't let this pass. Now it's not too late. Next year's going to be too late. Ultimately, this is about freedom. That's the way I see it. This is about giving power back to the people and enabling billions of people worldwide to use the financial markets to improve their lives and those of their friends and their families and their communities. Honestly, I think it's a violation of human rights not to allow people basic access to financial services. Because right now people are being kept in the dark, they're being robbed of education, and it's a travesty. And so I'm looking for people that want to join me and be a part of this solution. And that all happens inside the DeFi Academy. The gains my students are making are absolutely amazing. Double, triple-digit gains in the first month alone. That's amazing. This will change your life. Now is the time to get involved. I'm going to tell you exactly how my students in my academy made money in the last 30 days. I'm talking about real trading results. And let me just whet your appetite a little bit. Let me hit you with some numbers. I'm talking Brendan from New Zealand is up 68.77% on the month. Steve from Europe up 83%. Albert in Singapore up 169.9% on one single trade. I got Susan up 153% on her call options alone. Also rocking 139% returns and 442% returns as well on individual trades. These are people that are changing their financial future in the last 30 days, but it's based on trading discipline. I've graduated over 500 students from inside my academy from over 54 countries around the world. It's amazing. When it comes to crypto, DeFi, and blockchain, we love this space. We truly believe it's the future. This is down to our core. It's authentic to what we're doing, and everybody can tell through the camera because you can't make this stuff up. If you're watching me now, wherever you are, I implore you, take 60 seconds right now and join my academy. Apply today. Now you've got a chance. Life all comes down to a few moments. What are you going to do? What's the choice that you're going to make?
No, I think high inflation is going to be part of the American experience. It's going to be a way of life. And of course, businesses are going to have to figure out how to deal with it. And of course, that's going to make American business even less efficient than it is now. We're probably going to end up having a larger underground economy, which is probably one of the reasons that the IRS is gearing up with 87,000 more agents, because as more people operate in the underground economy, they may be not paying as much taxes as the IRS, would like. And so that's probably why they want more agents out there to go after, the small businesses and self-employed workers who you may end up being forced into the underground economy by inflation. But inflation is already...
And that's a cash economy? Is that what the underground economy is?
Cash economy. And the cash may not be dollars. I mean, inflation may force people to use other currencies, or maybe gold or silver. I doubt it would be Bitcoin, but it will be something viable as a medium of exchange and as a store of value. But yeah, I mean, they're going to be cracking down on Bitcoin too. I mean, that's part of what they're trying to do.
And when you see that 87,000 new agents going after small businessmen, does that make you sad? Does that make you concerned?
Oh yeah. I mean, look, the IRS is the most hated agency in the government, and for good reason, right? I mean, yet now we're going to make it much bigger, and people are supposed to be happy about that. I mean, how many Americans are excited about the prospect of getting audited more often, or if they've never been audited at all, having to be audited? Nobody. Everybody is in fear of getting a letter from the IRS. Nobody wants that. Now, of course, more and more people are going to get it, and the Democrats are proud that they voted for this. But the point I wanted to make is that Americans are already dealing with high inflation. Look at what's going on. Credit card debt has exploded. Why? Because people can't afford things. They have to borrow. Savings have collapsed to the lowest level since the Great Recession of 2008. Why? Because people are having to, clean out their savings. Look at the surge in moonlighting. Almost all the jobs that we've created the last 4 months have gone to people who already had jobs. So these are people that have full-time jobs, taking a part-time job, or people that have 2 part-time jobs, taking a 3rd part-time job. In fact, we now have a record number of Americans who have 2 full-time jobs at the same time. So what's happening? Because paychecks are being eviscerated by inflation, people are having to supplement their job with another job. And so obviously people don't want to work 2 or 3 jobs. They'd like to have some leisure time. They'd like to spend more time, with their families, but they can't, because one job won't cut it anymore. You can't feed your family. You can't pay the rent. So people are forced to take additional jobs. So this is already showing up, but it's really going to impact Americans when the dollar tanks, because so far the dollar's gone up, and that has actually been a relief. That is helping keep a lid on prices. U.S. prices would be going up a lot more if we had a weak dollar rather than a strong dollar, which seems like a paradox because we have inflation, and so by definition the dollar is weak, it's losing purchasing power. But on international foreign exchange markets, it's gained value, and that's helped keep the price of our imports down. And of course, America relies on imports. We import pretty much all the products, and so those products have been kept lower in price because of the strong dollar. Well, when the dollar reverses and gets killed, which I believe it will, then those import prices are going to surge, and that's going to really hit Americans hard.
Now that dollar crashing, why do you think that's imminent?
Well, I think the dollar has risen based on the false expectation that the Fed is going to win its fight against inflation, and that to win that fight, it's going to raise interest rates, and those higher rates are helping the dollar. But I think the markets are wrong. I think the Fed is going to surrender. Inflation is going to win the fight. I think the Fed is going to ultimately pivot, that Powell is going to turn his attention from inflation to the economy, that the Fed is going to go back to stimulus because the recession that we're already in and that so many people are denying is going to get much worse. We are in danger of an actual financial crisis if the Fed continues to raise rates, which it may. And if that crisis hits, the Fed is going to go back to the QE well, not only by trying to cut rates, but by printing more money to buy up more bad debt. But unlike the last few times they did that, the Fed is going to be doing that with inflation already very high. So what the Fed was able to hide behind with QE 1, 2, and 3, and even QE 4, was that inflation was still below their 2% target. And so therefore, they could still print a lot of money. And even if inflation went up, well, that wasn't a risk. That was actually a benefit. That was enabling the Fed to kill two birds with one stone, help the economy and achieve their 2% inflation target, which never made any sense to me. And I called the Fed out for that lunacy. And you had the same thing in Europe and in the UK. They kept saying, we don't have inflation, we need more. Yeah, we needed more inflation like a hole in the head, and now we've got it, right? But I knew that was just a bunch of nonsense. But if the Fed tries to go back to 0% interest rates, if the Fed tries to go back to QE with inflation at 6% or higher, right now it's still 8.5%, but if inflation is triple 2%, you can't justify throwing gasoline on an inflation fire. And so when the Fed does that, I think the dollar is going to burn to a crisp. I think the world is going to recognize that inflation is going to go on forever, that the balance sheet is going to expand forever. And then the bottom's going to drop out, not just of the US dollar, but of the US Treasury bond market. And when bond prices start to crash, that's when the Fed is going to have to really up the size of QE, because the Fed is not going to let the bond market crash. The Fed is going to stop that crash by buying those bonds itself. Well, where is it going to get the money to buy those bonds? It's got to print it. So it's got to create more inflation to buy bonds. But the more inflation the Fed creates, the more people who own bonds want to get rid of them. So it's a self-perpetuating spiral, and it just ends in a dollar crisis.
Now, while we're on inflation, you mentioned that people sometimes blame Putin for the oil, or the Ukraine crisis for wheat prices going up. Is that a factor? How has the war affected all of this?
Well, the war can affect certain prices, but not the overall level of prices. So if money supply stays the same and gas prices go up or food prices go up because of individual shortages in those sections of the economy, prices are going to fall someplace else. And it's all a function of individual supply and demand. The only way prices can go up across the board is if the government accommodates that with increase in the supply of money. Now we have more money to pay higher prices for everything. So inflation is always created by government. It's not created by economic growth. It's not created by too many people having jobs. It's not created by greedy businessmen gouging their customers. It's not created by workers demanding raises. None of this nonsense. These are all excuses to try to put the blame of inflation on the public instead of accepting responsibility, which is what politicians never want to do.
So that's really well explained. I've never heard that before, Peter. I like that. Tell me, how much damage was done to the dollar when the U.S. decided that they would pull the dollar privileges from people around the world, kind of on the back of this invasion? Maybe I'm talking mainly about Russians. Is that something that ultimately will also hurt the dollar in the future and hurts the credibility of the dollar? Hey, do you want to profit from crypto? Then join my DeFi Academy. The Crypto DeFi Academy will help you create generational wealth. But don't take my word for it. Listen to my students.
When I first got into crypto, I remember thinking to myself, I need to learn more. Brian Rose, learning crypto, learning DeFi, gotta do it.
I am so grateful that I jumped in and did this. I had to break through some limiting beliefs that I can do this, that I can afford this, that I can be in this.
It challenges the things that are deeply rooted within us.
Joining DeFi Academy has been one of the best decisions I have made on my blockchain journey.
This course was a life changer, a game changer, a huge eye-opener, coming from knowing practically nothing at the speed of the learning over 4 weeks was just fantastic.
The information you provided in this class was invaluable.
I feel far more confident in my next steps.
You took complex concepts and made them easier to understand.
What's different than so many other ones is it just doesn't tell you what to do. It actually makes you do it.
This is for people who are serious about becoming traders. This is the way it should be done. I realized from this learning experience again that it is not about what you learn, but about who you learn it from.
The energy was insane. I've never experienced such incredible energy on a live call. Brian Rose, you are a legend, my friend.
It's the only thing in the market where you can get all information and learn everything what you need to know.
Everything is so clear and so well done, and I'm just forever grateful for this program.
It made me feel so much more confident about crypto than I did before.
I did not anticipate how passionate I was going to become about it.
It's also been like a big learning experience for me, not just in the crypto space, but just an overall balance of life.
What I've learned is, how to take ownership, of my life in a way that I really hadn't before.
Yeah, you can't put a price on that, really.
I would recommend it to anybody, top notch.
Excellence does not come cheap. So if you want excellence, you got to pay for it, but it's so worth it.
Pull the trigger. That's what this course is about.
You're not going to regret it, really. It's amazing.
Thank you, Brian and team.
So what are you waiting for? Crypto is happening now. Click the link below, submit your application, and let me mentor you on how to create generational wealth and build the decentralized financial infrastructure of the future.
Well, it hasn't hurt it yet, obviously, because the dollar's gone up. But I do think that, yes, it is another nail in the coffin for the dollar, although we haven't buried it yet. But it certainly sends a message to the rest of the world that you better get off the dollar standard, that you need to divest yourself of dollars. You need to make sure that your economy does not depend on dollar-denominated trade. And so move away from the dollar, because by relying on the dollar and depending on the dollar, you give a lot of power to the United States. You create a weapon that the U.S. can then turn and use against you. So why do the Chinese want to create a weapon for the U.S. to use against China? I mean, it doesn't make any sense. I mean, look what we did to Russia. I mean, Russia had already moved a lot of its reserves to gold, and so those reserves, we couldn't touch. But they still had reserves in dollars, and those were frozen. So, what good was that? And so it calls into question the viability of the dollar. It's not really sacrosanct. I mean, the U.S. government could decide if they're going to withdraw your privilege to use the dollar and to utilize a SWIFT system that runs on dollars. They can, yank that privilege away from you if they don't like something that you did. And that doesn't make any sense for a nation to put themselves in that predicament, especially if we're out there claiming they're our enemy. So if we're saying, hey, the Chinese are our enemy, well, why does the enemy, want to be in a position where it holds all these dollars and all these treasuries? They wouldn't. They'd want to get rid of them. And so I think that this will accelerate a process that was going to happen anyway. And I think it just shows you how little American politicians understand the predicament that we're in and how dependent we are on the dollar being the reserve currency. That is what makes our bubble economy function. The only reason we can run these, $1 trillion plus per year trade deficits is because of the dollar's role. We're able to exchange the money we print for the goods everybody else makes. If the dollar is no longer the reserve currency, we can't do that anymore. The only way we'll be able to import goods is if we export goods, which means we have to produce stuff. And producing actual goods that people want to buy is a lot harder than just printing money. And it consumes a lot more resources and maybe even a lot more pollution than just creating numbers out of thin air or digits, on a computer. So it's amazing that the politicians do not appreciate.
To continue watching the rest of the episode for free, visit our website londonreal.tv or click the link in the description below.